Hey, good morning, everyone. It's Kim Krompass from the Price Action Traders Institute, and it's Friday, January 5th, 2018. Happy New Year to everyone. Today I want to talk about the clear directional move trade. It's one of the most frequently seen trades as a price action trader, and it's one of the trades that if you were a long-term trader instead of intraday like we are, that you would probably call a trend trade. So we're day traders at the Price Action Traders Institute. We like to get in and out of the market during one session so that we don't carry risk overnight. Today I want to talk about two trades in particular, and they're both from yesterday on Thursday, January 4th. I don't trade on Fridays, it's just a personal preference, but these trades yesterday were textbook classic examples of clear directional moves. And if you are a New York session trader, you will want to know either how to get into these moves or what you could have, should have done. Or maybe you took these trades with me. There were several of you that were in these moves, but there's some traders out there that missed them. So this is for the benefit of everyone doing a post-analysis or post-trade review, just to talk about the possibilities. So let's go ahead and take a look at the first trade. Here's a chart of the Euro-Yen, the EJ as we call it. And I looked at this when I was going through and doing my market analysis before the ADP news this morning, or I should say Thursday morning. That was a news event that came out at 5:15 Pacific, and I was already in my office at 5 a.m. doing this analysis. One of the things is that when it's a US-based red news event, if you see a cross pair that's in a clear directional move, you can actually trade those pairs before the news or during the news or even after the news, of course, but you do not have to stand aside. The only thing you have to stand aside for would be USD-backed pairs. So given that, I did my analysis, noted that during the Asian session, price was ranging. Price had a breakout during early London and came right back into the range, but then it had a sustained break and began this beautiful climb, or as we like to call it, stair-stepping price action, a beautiful clear directional move. I yellow line this quickly. This is the 5 a.m. candle. I actually entered this trade just a few minutes after 5:05 a.m. when I looked at the trade record. Got in this right here. This was a manual execution. It was not a pending order because I was doing this live while I saw it. And I was looking for the market to continue up. I entered this trade at 135.88. So again, that's 135.88. And it was at 5:05 a.m. Pacific, so 8:05 Eastern. Let's go ahead and take a look at the next screenshot that I have. This is a screenshot from our trade planning session at 6 a.m. Pacific, 9 a.m. Eastern. And in this planning session, again, I had reiterated that the EJ, although it started out as a range in early Asia and early London, it broke out, had this beautiful move, and now we were looking for continued upside movement. I don't know if you can recognize it, but this is where I got into the first trade down here at 135.88. All right, so there was a yellow line entry actually during the session that was at 136.08. So again, the entry during the trade planning session was at 136.08. All right, so price had moved off of this 135.88 area and had already come through the 0 area. And I was holding on to this trade because there was really no reason to get out of that trade before the planning session because, well, if you looked across the board at all the price action, it was confirming that I should or could stay in this move. And that's another thing. You want to confirm the price action across the board before you decide to press a trade. So in other words, if this had been the only pair moving at the time that I was taking this trade, I probably would have gotten out at the next level at 0, 0. All right. So let's go ahead and take a look at the next slide. What you're looking at here is, again, another screenshot of my trade. And this is at the point when I had locked 30 pips in. And that was right here. You can see this dotted red line right here. Okay, we had a nice burst of momentum. It's after the planning session is now over. This was the entry during the planning session right here. With a 10 pip stop, this stop was not challenged or should not have been hit. If you executed very cleanly, there was plenty of room, even with the spread, to stay in this trade. And now there's been a big burst of price. So now I've pulled up my protective stop. So I've moved it from just being a 10 pip stop on the EJ to now locking in 30 pips. Let's go ahead and take a look at the next slide. This is a screenshot that I called EJ Now. And the reason I was looking at it was I was targeting up here at 50. You can see my target in place. Here's my protective stop still sitting here. And I'm watching the price action. If you recall from the prior slide, or if you need to go back in the video, take a look at it. I was doing it about 2 candles back when I called it the EJ locked plus 30 at that point. So now I've got a screenshot of the price action starting to pull back. I don't know, maybe I want to get out. What's happening across the board? And I start to take in all the information that I see on all the yen crosses. What you're looking at here is the actual trade pulled on the chart after the trade was done. Again, here was my entry down here, the original entry at 135.88. This would have been the entry during the planning session right here for traders that missed this original entry. And I pulled up this stop a little bit above 20 because I didn't want to miss a move if it really fell. I didn't want to get taken out for at 30, I guess, for plus 30, because the pair had gone up to 136.37. So it had gone up almost 50 pips, 49 pips from my move. So I decided, what am I going to be happy with? What can I live with? And I quickly pulled the stop up to lock in 35 pips. That's what you see here. Even though I was targeting up here and prices started to pull back, and it was on this candle, finally the next candle, that hit my stop, and I was taken out for plus 35. And again, the high made it up to 37. It looked good in that moment when price was dangling up here for this 30 minutes, these 2 candles, and looking across the board to see what was happening for a move up into 136.50. It didn't happen. So the next best thing was to book profits at around, I guess it would have been around 23. So at 136.23 is where I got out, just above the 20 level for a 35 pip trade. So let's talk about some of the key takeaways from this. Here's a few things that I want you to remember. 1, you have to know what's on your upcoming news calendar the following session that you're going to trade. So if you're a London session trader, before you go to bed, take a look at your news calendar. See, is there any red news coming? What do I need to be prepared for, if anything? So you always want to know what's ahead tomorrow. You don't want to show up at the last minute and say, oh my God, there's a red news event, and just be totally discombobulated. If you're a New York session trader like me, I do the same thing. I know what's coming up the day before. So before I go to bed, I take a brief look. I say, what's on the news calendar? Okay, I'm ready. I know I need to be up. In yesterday's case, I needed to get up at 4:45 a.m. so that I could walk into my office at 5 a.m. and be ready for a news event at 5:15. The other most important thing is show up, be ready. You have to be rested. You can't just expect to walk into your office or onto your computer screens and make money doing this. It requires focus. It requires some attention to detail. It requires knowing your criteria. It requires being mature to take responsibility for what you're about to engage in, which is risking money. The other thing is, you have to do your market analysis, meaning you have to have your trade plans done before the news event comes out. And the reason we do that is because you want to ask yourself, has this news event changed anything? For instance, if there's a clear directional move and the news event completely wipes that clear directional move off, after the news event candle is over, you have to readjust and redo your trade plan. Or if price is ranging before the news event and during the news event price breaks out of that range, you want to make sure that price closes outside of the range before you continue trading that pair. So there's a few things that you need to do when you do your trade analysis, and the reason is to ask yourself, has the news changed anything? So that you know whether or not you need to make adjustments in your trade plans. And the other thing is, the members have a video about knowing the best times to trade, and the most recent one is June 7th, 2017. It's in the technical training section on the webinar resources, just webinars. And I would advise everyone to review that video. I think about 30 minutes in, we start talking about the best times to trade. This is really important to know and to have under your belt. It can make a huge difference between your results and other traders' results, my results, Kevin's results, some of the traders who do really well with this. All right, so I hope this video helps you. And again, this is Kim Krompass from the Price Action Traders Institute. Hope you have a great weekend. Thank you.